Facilitator today. At this time, I would like to welcome everyone to the BlackRock Incorporated Third Quarter 2020 Earnings Teleconference. Our host for today's call will be Chairman and Chief Executive Officer Lawrence D. Fink, Chief Financial Officer Gary S. Shudlin, President Robert S. Capito, and General Counsel Christopher J. Meade. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer period. If you would like to ask a question during this time, simply press star, then the number 1 on your telephone keypad. If you would like to withdraw your question, press the pound key. Thank you. Mr. Meade, you may begin your conference.
Good morning, everyone. I'm Chris Meade, the General Counsel of BlackRock. Before we begin, I'd like to remind you that during the course of this call, we may make a number of forward-looking statements. We call your attention to the fact that BlackRock's actual results may, of course, differ from these statements. As you know, BlackRock has filed reports with the SEC, which lists some of the factors that may cause the results of BlackRock to differ materially from what we say today. BlackRock assumes no duty and does not undertake to update any forward-looking statements. So with that, I'll turn it over to Gary.
Thanks, Chris, and good morning, everyone. It's my pleasure to present results for the third quarter of 2020, and I hope everyone and their families are remaining safe and healthy in the current environment. Before I turn it over to Larry to offer his comments, I'll review our financial performance and business results. While our earnings release discloses both GAAP and as-adjusted financial results, I will be focusing primarily on our as-adjusted results. BlackRock's steadfast focus on serving clients, employees, shareholders, and the communities in which we operate continued in the third quarter. Our strong performance during the quarter and throughout the year, amidst unprecedented market uncertainty, is a testament to the investments we have made over time to build a diverse and resilient business model, the strength of our BlackRock brand, and the commitment of our amazing employees to always deliver for clients. Our broad-based platform, pairing diverse investment capabilities with best-in-class technology and rigorous risk management, has now generated almost $400 billion of total net inflows over the last 12 months, representing 7% organic base fee growth. Our voice is resonating with clients more than ever, and our ability to address their current challenges through whole portfolio solutions, no matter the market environment, is a direct result of a strategic vision we embraced well over a decade ago and grounded in the strength of our One BlackRock culture. BlackRock generated $129 billion of total net inflows in the third quarter, representing 7% annualized organic asset growth and 9% annualized organic base fee growth. As markets strengthened during the third quarter, BlackRock leveraged the entirety of its global platform to help clients meet long-term needs. Not only did we see positive flows across all asset classes, investment styles, and regions for the quarter, we have also generated positive flows over the last 12 months across each product type on our active platform, evidencing the strength of our alpha-generating capabilities. Record third quarter revenue of $4.4 billion increased 18% year over year, while operating income of $1.8 billion rose 17%. And reflected $83 million of costs associated with a successful closed-end fund launch in late September. Record earnings per share of $9.22 was up 29% compared to a year ago, also reflecting higher non-operating income and a lower effective tax rate and diluted share count in the current quarter. Non-operating results for the quarter included $116 million of net investment income, driven primarily by mark-to-market gains on our seed and co-investment capital, but also reflected incremental interest expense associated with our second quarter debt issuance to pre-refinance our May 2021 debt maturity. Our as-adjusted tax rate for the third quarter was approximately 23%, which we estimate is a reasonable projected tax run rate for the fourth quarter of 2020. Third quarter base fees of $3.2 billion were up 8% year over year, primarily driven by 6% organic asset growth and the positive impact of market beta and foreign exchange movements on average AUM, partially offset by strategic pricing changes to certain products. Sequentially, base fees were up 9% from the second quarter, reflecting similar dynamics, but also the positive impact of one additional day in the quarter and the negative impact of lower securities lending revenue, which declined $57 million from record second quarter levels as cash spreads tightened in response to the Fed's intervention in money markets. The impact of lower securities lending revenue during the quarter was the primary reason we saw a sequential decline of 0.2 basis points in our annualized effective fee rate, despite the positive impact of strong organic base fee growth. Record quarterly performance fees of $532 million increased significantly on a year-over-year and sequential basis, reflecting strong overall performance from our single strategy hedge fund platform. A significant portion of the year-over-year increase in performance fees was attributable to a single hedge fund that locks annually in the third quarter and once again delivered exceptional performance over the last 12 months. Quarterly technology services revenue increased 9% year-over-year. While recent growth has been impacted by extended sales and contracting cycles in the current environment, we remain committed to low to mid-teens growth in technology services revenue over the long term. Demand for integrated and resilient investment management technology to support effective risk management and operational efficiency has meaningfully accelerated in the complex remote work environment brought on by the COVID-19 pandemic. Advisory and other revenue of $42 million was down $20 million year-over-year, primarily reflecting the absence of PennyMac equity method earnings following the charitable contribution of our remaining equity stake in the first quarter. Total expense for the third quarter was up 19% year-over-year, primarily driven by higher compensation and G&A expense. Employee compensation and benefit expense increased 27% from a year ago, driven in part by higher incentive compensation associated with higher performance fees and operating income. And G&A expense was up $76 million year-over-year, reflecting $80 million of closed-end fund launch costs associated with the successful close of the $2 billion BlackRock Capital Allocation Trust. Recall that we exclude the impact of these product launch costs when reporting our as-adjusted operating margin. The increase in year-over-year G&A expense also reflected higher technology expense, including certain costs related to COVID-19, and lower marketing and promotional expense, which is where we categorize our T&E expenditures. Core G&A expense for the third quarter, which among other items excludes product launch costs and certain incremental costs associated with COVID-19, was essentially flat with the second quarter, and we would continue to expect core G&A expense for the year to be generally in line with the estimates we provided in July. Our third quarter as-adjusted operating margin of 47% was up 100 basis points from a year ago, benefiting from significant performance fees in the current quarter. We remain margin aware in the current environment and committed to optimizing organic growth in the most efficient way possible. Our long-term strategic growth plan continues to focus on accelerating growth in Aladdin, iShares, and private markets, keeping alpha at the heart of BlackRock, delivering whole portfolio solutions, and becoming the global leader in sustainable investing. Our capital management strategy remains first to invest in our business and then to return excess cash to shareholders through a combination of dividends and share repurchases. As a reminder, in the second quarter, we completed our targeted level of share repurchases for 2020, including the repurchase of $1.1 billion of common shares from PNC at $415 per share. While we did not repurchase any shares of common stock in the third quarter, we intend to be opportunistic should attractive relative valuation opportunities arise during the remainder of the year. As you will hear more from Larry, BlackRock has never been better positioned to deliver for clients as we leverage our unique insights, guidance, and solutions to help clients meet long-term investment needs. Third quarter organic asset growth of $129 billion reflected the diversity of our platform, with strong flows across the franchise, especially in iShares, active strategies, and cash. iShares net inflows of $41 billion, representing 8% annualized organic asset growth and 7% organic base fee growth, reflected continued momentum in fixed income and sustainable ETFs, two strategic product categories where we have leading market share, and inflows into higher fee precision exposures as institutional buyers utilize these highly liquid trading instruments to express tactical market views. Retail net inflows of $20 billion, representing 11% annualized organic asset growth and 12% annualized organic base fee growth, were positive in both the U.S. and internationally and across all major asset classes. Inflows reflected broad-based strength in active fixed income, equity, liquid alternatives, and multi-asset funds. As previously mentioned, retail multi-asset flows also included the successful close of the $2 billion BlackRock Capital Allocation Trust closed-end fund, made possible by the top decile performance of our global allocation investment team. BlackRock's institutional franchise generated approximately $37 billion of net inflows in the third quarter, reflecting demand for our top-performing active strategies and industry-leading index capabilities and renewed client interest in fixed income. Institutional active net inflows of $30 billion were also broad-based across all product categories and were led by $12 billion of active fixed income flows, reflecting strong activity among insurance clients. Multi-asset net inflows of $11 billion were driven by continued growth in our LifePath target date franchise and OCIO client wins, where BlackRock's global insights and unique ability to provide whole portfolio solutions enable us to be the partner of choice to clients. Across our retail and institutional client segments, we generated a record $10 billion of active equity net inflows, representing our sixth consecutive quarter of positive flows in this product category. Flows were led by top-performing franchises in technology, health sciences, and U.S. growth equities, as well as quantitative strategies. We remain well-positioned for future growth in our active businesses, with over 80% of fundamental active equity, scientific active equity, and taxable fixed income assets performing above their respective benchmarks or pure medians for the trailing 5-year period. Overall demand for alternatives also continued, with nearly $5 billion of net inflows into illiquid and liquid alternative strategies during the third quarter, driven by infrastructure, real estate, and liquid alternatives. Momentum in fundraising remains strong as we have approximately $23 billion of committed capital to deploy for institutional clients in a variety of alternative strategies, representing a significant source of future base and performance fees. BlackRock's cash management platform continued to grow, even as the broader industry saw outflows, generating another $28 billion of net inflows in the third quarter. In September, as gross yields fell below relevant thresholds, we did begin to waive fees on select government funds. While there was minimal impact of third quarter base fees given our proactive management of portfolios during the year, we would expect fee waivers to accelerate during the fourth quarter and into 2021. Finally, third quarter advisory net inflows of $3 billion were primarily linked to asset purchases managed by our financial markets advisory group. Recall that revenue linked to these assignments is primarily reflected in the advisory and other revenue line item of our income statement. The continued strength of BlackRock's results once again validates the resilience of our globally integrated asset management and technology business model, which allows us to consistently and responsibly invest for the long term, evolve ahead of client needs, and serve all of our stakeholders, no matter the market environment. With that, I'll turn it over to Larry.
Thanks, Gary. Good morning, everyone, and thank you for joining the call. I hope you and all your loved ones are staying healthy and safe. We're reporting earnings this quarter from BlackRock's New York office once again. I've been back in the office about 3 days per week since last month, and it's been very productive and incredibly energizing as we are working diligently to help more and more clients and more people, both in this environment and certainly over the long run. As investors around the world continue to deal with the pandemic and the uncertainty about the future, BlackRock is doing everything we can to help clients navigate the challenges that come with it. Clients are looking for strategic insights on the economy and markets, including the impact of inflationary pressures and sustainability risks and opportunity across their entire portfolios. They want guidance on how to navigate market rotation and volatility. They need solutions that make their portfolios more resilient for their long-term needs and their long-term aspirations. BlackRock is better positioned than ever before to deliver our comprehensive global investment platform. across active and index, across asset classes and geographies, and across all exposures. All of this is unified by one culture and unified by one technology platform, all to serve our clients better. We have purposely built our business model over the last 32 years, both organically and through historic transformational acquisitions, to be centered around client needs. This positioning, coupled with our strong fiduciary culture, has differentiated BlackRock in the asset management industry. Clients are entrusting us with a greater share of their assets and developing deeper partnerships with BlackRock across their whole portfolios. And this is being reflected in our results. We generated $129 billion of total net inflows in the third quarter, representing a 7% organic asset growth and 9% organic base fee growth. Our strong organic growth underscores the benefits of the diversity of our platform. We saw positive inflows across all client types, all asset classes, all investment styles, and across all regions. We delivered 18% revenue, 17% operating income, and 29% earnings growth, while at the same time expanding our as-adjusted operating margin year over year. Consecutive quarters of strong growth through the pandemic are a testament to the flexibility and our resilience to our business model. Our ability to aggressively embrace change, to evolve to meet our clients' needs, continues today and drives our strategy for long-term growth. And I'm more convinced than ever before that our ability to meet the challenges of our clients will continue to drive future growth for BlackRock. The global pandemic remains a key factor for investors over the near and long term, while many individuals and companies are going through a painful period of readjustment as we enter the 9th month of COVID-19. Economic activity is beginning to restart around the world as fatalities and hospitalization rates per infection are dropping. Despite renewed localized lockdowns to contain the virus clusters, the unprecedented joint monetary fiscal policy response by many governments, including the U.S., is providing a bridge for disrupted income streams and has so far surprised on the upside. This improving macro backdrop has fueled an equity market rally over the past few months, in a large part due to the mega cap technology companies. Investors need to navigate growing risk in the coming months. However, including the different speeds of economic restart across countries, a lag in stimulus, particularly in the U.S., and the upcoming U.S. election next month, which could have significant implications on policy and on markets. This pandemic is also accelerating key structural trends, including the fragmentation of the global economy, and what I've been repeatedly talking about, the silent crisis of retirement. We continue to use a full breadth of our capabilities to meet the needs of our diverse client base, including pensions, insurers, and other institutions around the world, as well as wealth managers who serve millions of individuals. The strength of BlackRock's brand enables us to participate in many of the critical conversations impacting our industry and society. We're listening to our clients and bringing their voices to these conversations. Nowhere is this more evident than in our sustainability strategy and ambitions. Investors are increasingly recognizing that sustainability considerations are central to investing in whole portfolio construction, and I firmly believe this move towards ESG is a tectonic shift that will be playing out for the years to come. BlackRock is accelerating our efforts to ensure we may remain uniquely positioned to serve clients with research, investment solutions, and technology. We have grown our sustainable solutions to more than 125 iShares ETFs and over 65 dedicated active strategies. And we're now working on building new technology capabilities to help BlackRock and our clients quantify and measure factors such as the impact of climate change on companies and on our entire portfolios. Through our Financial Markets Advisory Group, we are leveraging our capital markets expertise, our industry-leading analytics and technology, and fiduciary business model to serve governments around the world and the people they serve. We take on these mandates to fulfill our purpose of helping more and more people experience financial well-being. And we approach the great responsibility that comes with it with utmost fiduciary focus and professionalism. We're seeing clients increasingly look for alpha in their portfolios, and BlackRock's top-performing $2 trillion in AUM and active management platform is well-positioned to deliver when they need it most. I'm incredibly proud of the alpha our portfolio management teams across BlackRock are generating for our clients. Our ability to deliver differentiated returns is a result of our long-term investment to build an active platform with global reach, interconnectivity across teams and across regions, and unparalleled access for our teams to data and insights, integrated technology and risk management, and a scalable processes that enable them to do their job and to deliver more consistent outcomes over the long term. Our active investment teams value the benefit of BlackRock's platform, and this is translating into some of the strongest performance we've seen across the platform. 80% of our fundamental active equities and 87% of our taxable fixed income assets are above benchmark or peer medium for the 3-year period. And this is driving flows across our active business. Our team's expertise is now being recognized. For example, our health science strategy was recently ranked #1 for risk-adjusted returns out of more than 9,000 U.S. equity mutual funds that have a 15-year track record or more. We generated $47 billion of active inflows in the third quarter, positive across equities, positive across fixed income and multi-asset strategies, and positive across all our alternative strategies. This includes a record $10 billion of net inflows in active equity strategies and the successful launch of the BlackRock Capital Allocation Trust, which raised $2 billion, the second largest closed-end fund launch in our history and the industry since 2013. In the current low interest rate environment, clients are looking for yield in their portfolios. The industry saw strong client demand for fixed income strategies in the third quarter, and BlackRock's diverse and comprehensive fixed income platform generated $70 billion of inflows across active and index strategies. We also saw continued demand for our cash management strategies and generated $28 billion in net inflows, despite the low rate environment and even as the industry experienced redemptions in the quarter. iShares net inflows of $41 billion were driven by client demand across multiple product areas. Fixed income and sustainable ETFs led the way, with strong flows in core equities and precision exposures. The strong flows we are seeing across multiple product segments with iShares globally are a result of the strategic investments we made over time to support the adaptation of ETFs and the evolution of their many uses, and to build the largest, the most diverse, and the most liquid platform globally. We saw record momentum around fixed income ETFs, which continue to attract new users. iShares fixed income ETFs generated $20 billion in net inflows in the third quarter, and we have captured nearly 40% of industry flows year to date. As we said before, fixed income ETFs are one of the fast-growing categories in asset management. They cost $1 trillion in assets last summer, and now over $1.4 trillion, and we think can be a multi-trillion-dollar market in the years ahead. iShares market leadership, our liquidity and performance under the stress conditions earlier this year has meant that clients of all types globally have been turning to iShares at greater scale. Our leadership is a result of our long-standing focus on modernizing the bond market and our long-term strategic commitment to the value, to the transparency, to the liquidity and performance that iShares fixed income ETFs can bring to clients. Demand for sustainable products is accelerating as more investors embed ESG considerations in their portfolios. BlackRock generated another $8 billion in inflows in sustainable iShares ETFs in the third quarter, and $25 billion year to date, more than 2 times the entirety of all of 2019. We also believe that sustainable indexing is helping to expand the market for sustainability overall by expanding access to more clients who want to invest in this way. A focus on sustainability can help make portfolios more resilient, and BlackRock remains committed to being the leader in this high-growth strategic segment and making sustainable investing accessible to more people worldwide. In addition to iShares, we are also innovating the tax-efficient product designs across our platform. The movement towards fee-based advice and client needs for tax optimization in their portfolios create significant opportunities for BlackRock, and we are investing heavily in both ETFs and separately managed accounts, or SMAs. We're the second largest provider of retail SMAs, and we recently launched our tax-managed equity index SMA strategy in the wire and RIA channels. This is an important addition to our $126 billion SMA business that has been strong growth over the past several years, particularly in fixed income, where we are a market leader. We are focused on expanding our capabilities and innovating both solutions and portfolio enablement technology to meet the needs of all our clients, all our financial advisors, and also their own clients. Clients will increasingly need alternative return sources, such as private markets, for portfolio diversification and resilience, particularly in down markets. Alternatives are playing a critical role in holistic portfolio construction, and we have purposely invested over time to build a comprehensive, a diversified platform across infrastructure, private credit, real estate, private equity solutions, hedge funds, and alternative solutions to meet client demand for this asset class. The benefits of these investments are very clear. We generated $5 billion in net inflows across liquid and illiquid alternative strategies in the third quarter, and we deployed another $2 billion of client capital as we seek out opportunities for our clients. And as clients increase their alternative allocation within their portfolios, they're looking for a more sophisticated whole portfolio view of their entire asset base. One of the biggest structural trends within our industry is a growing need for robust enterprise operating and risk management technology. The pandemic is accelerating the shift from fragmented technology systems to a unified technology platforms like Aladdin that can support the increased need for risk transparency across asset classes and the construction of more resilient portfolios. It is also highlighting the importance of a better understanding sustainability risk and opportunities in portfolios. BlackRock is expanding Aladdin's ESG data and analytics, and we recently released over 1,500 third-party ESG metrics to Aladdin clients. We're developing new Aladdin products as well to serve a growing demand and need for better tools to manage climate risk and investments. And we're very excited to having early conversations with our clients about Aladdin Climate. BlackRock is a global company with employees in over 30 countries and clients in more than 100 countries. I've spoken before about the importance of being immersed in the local markets around the world so we can respond to the unique needs and objectives of these clients in their home market and effectively delivering all of BlackRock's capabilities. We are seeing the benefits of that approach with clients in Europe and Asia entrusting us with more than $57 billion of long-term net inflows in the third quarter, representing nearly half of our total organic growth during this period. And we continue to use our expertise to improve issues such as investor access and retirement for more people around the world. In Brazil, we have worked with local regulators and exchanges to cross-list ETFs on a local exchange, which will reduce barriers for Brazilians to access global markets. With rates at an all-time historical low of 2%, the current backdrop has never been more favorable for Brazilians to diversify their holdings. And BlackRock is well positioned to capture that opportunity. Clients are increasingly interested in emerging markets as long-term investments, including China, which is the world's second largest economy and a key area for investment return opportunities and portfolio diversification. Many of our clients expect us to both understand and invest in this market on their behalf because it is an important component in achieving their long-term financial goals. Having a local presence in China will help us better serve clients globally. We also believe that we can apply our global expertise in China as the country seeks to reform and open its financial markets and address its own retirement needs. During the quarter, we received regulatory approval that allows us to take the next steps towards forming a wholly owned fund management company and a wealth management company joint venture. To anticipate what client needs and evolve our platform to meet these changing needs, BlackRock is continuously working to ensure our senior-most leaders represent the breadth of our business, the depth of our talent, and diversity of our clients we serve. We recently added 3 new members to our Global Executive Committee. I'm more excited about our BlackRock organization, our people, and the strength of our leadership bench than at any time in our 32-year history. I continue to be incredibly proud of our 16,000 employees who partner with clients. They uphold our culture. They live our purpose each and every day. Together, we have helped a lot of people navigate this crisis. We are helping people invest for their future, and we're helping governments get their economies back on track. Our employees are earning our clients' trust because of the high standards we hold ourselves to. We are true to who we are. We are living with purpose. We have a voice that's resonating with more clients than ever before. I see a tremendous opportunity ahead, and BlackRock remains focused on the long term, on aggressively embracing change and evolving so we can best serve our clients over time. I look forward to extending on our ambitious plans in the year ahead. With that, let's open it up for questions.
Thank you. At this time, I would like to remind everyone, in order to ask a question, please press star, then the number 1